students, let us discuss about the new income tax rules 2025. Why the tax department might come knocking on your door this year. Let us see the reasons. If you have spent more than 10 lakhs on your credit card last year, the taxman might be watching. Here is why your ITR could land you in serious trouble, even if you think you have done nothing wrong. The income tax department has just rolled out game-changing rules for 2025, and trust me, they are not just playing around this time. If your ITR doesn't match what the tax authorities already know about your lifestyle, you could get slapped with a notice or worse, a full-blown investigation. This video is your complete guide to the new ITR scrutiny rules for the financial year 2025-26. From red flags like wrong TDS claims to high-value spending mismatches, we'll break it all down in plain English so you can avoid becoming the next target in the government's tax crackdown. And by the end, you will know exactly what to do to stay out of trouble. Let us get into it. So what is really going on? The income tax department has gone full high-tech in the year 2025. No more manual guesswork. This year, your ITR isn't just being reviewed. It's being scanned, cross-verified, and profiled using artificial intelligence and real-time data analysis. That means your income, spending, bank transactions, investments, even your shopping habits are being connected like never before. How this new data-driven system works, let's see now. The department now uses advanced AI, that is advanced artificial intelligence, to compare what you file in your ITR with your bank account activity, your credit card spending, your mutual fund investment, your foreign travel history, and your luxury purchases like gold, watches, and real estate, even bikes and cars, etc. So if you say your income is just 6 lakhs a year, but you flew business class to Europe, bought an iPhone 15 Pro Max or whatever it is, and invested in a 40 lakhs flat, the system flags it. This isn't a conspiracy theory. It's literally what the income tax department told us they are doing. And it is not just the ultra rich anymore. Their net is getting wider. Who will be scrutinized in the year 2025? Let's break it down. Under the new rules, the following cases will face compulsory scrutiny. Case number 1. If you have had a tax survey, if the department has done a tax survey on your premises in the past, your return will be investigated this year. It doesn't matter how clean your current ITR is, but past survey is equal to automatic red flag. Case 2 and 3. If there has been a search or seizure, if you are raided or your documents were seized between April 1st, 2023 and March 31st, 2025, you are definitely on the radar. These people will be monitored extra closely this year with no exceptions. Case 5. Did you forget to declare 25 lakhs rupees in income last year? Yeah, they remember. If you have been caught hiding income before and the amount was over 50 lakhs in metro cities and 20 lakhs in non-metros, this year's return is going under microscope. Case number 6. If the CBI, ED or other agencies reported you any intel from agencies like the CBA, Enforcement Directorate, or other now automatically triggers scrutiny. This could be related to money laundering, hawala, benami assets, or even a suspicious tip-off from a foreign exchange transaction. But that's not all. Even normal people are getting notices. Why? You don't need to be a billionaire to get noticed. You just need to be inconsistent, then you are noticed. Red flag that triggers an ITR notice in 2025 are spending more than 10 lakhs a year via credit card. That's being tracked. Property transactions worth 30 lakhs or more. That is also flagged. Cash deposits over 2 lakhs rupees. Big alert. Real estate bought under your wife or child's name. You are still liable under section 64. Foreign trips, buying gold, mutual fund investments, all these are now linked to your PAN and ITR. It's not about the amount, it's about the mismatch. Let us talk about TDS, the most common mistake. Claiming a wrong TDS refund, that alone can get you a notice. Say your Form 26AS or AIS shows that you have received rupees 1.5 lakhs in FD interest and you didn't mention it in your ITR. Big problem. Or maybe you claim TDS that was never deducted in the first place. Maybe by accident, maybe not. This will be caught by the system. You might think it's just a small mistake, but even the new system, every rupee matters. The scrutiny isn't just about what you say, it's about how your entire financial behavior looks from the outside. Common mistakes that will put you on the hot seat. Here is some simple checklist of what not to do in your ITR this year. Number 1, not disclosing interest from fixed deposits or saving accounts. Claiming TDS refunds without actual TDS proof. Claiming HRA or deductions without valid rent receipts or documents. Not reporting income from investments in your spouse or child's name. Forgetting to declare income from part-time freelancing, YouTube, etc. Think of this way. If you are the income tax department and someone showed you 5 lakhs income but had 10 lakhs worth of spending, won't you raise your eyebrow? They are, and now they have the tech to do something about it. Real world example. Let us take an example case from last year. A 32-year-old software engineer in Pune declared rupees 7.2 lakhs in income. But his credit card bill was around 11.8 lakhs rupees for that year. So he had spent big on travel, gadgets, and even a luxury bike. The AI system, that is artificial intelligence system, flagged this. He got a notice asking for the source of funds, and eventually he had to pay penalties for hiding freelance income and cash earnings from tutoring that he had never reported. This isn't fear-mongering. Definitely this is not fear-mongering. This is happening right now. So here is the scary part. Most people have no idea they are doing something wrong. They think they are safe because they have filed the ITR on time. They think small mistakes don't matter at all. They think I'm just a salaried person. Why would they care? No, that is not the case. But in 2025, that mindset can get you in serious trouble. Because the system is smarter than ever, it is not just looking for mistakes, it's looking for patterns. And if you have got a mismatch between what you earn and how you live, you are the pattern. So how do you protect yourself? Here is what you can do starting today to make sure your ITR doesn't become your biggest regret of the year. 1. Match your income with the lifestyle. If you spend 11 lakhs rupees this year, don't declare 6 lakhs in income unless you can explain the gap. Show loans, gifts, or other income sources with proof, not just a story. Number 2. Use Form 26AS and AIS properly. Before filling, check both Form 26AS and Annual Information Statement and make sure everything from TDS, bank interest, dividends, and high value transactions are matched. Declare every bit of income, freelance work, YouTube, tuition, crypto gains, or whatever it is. It all counts. Even if it is small, declare it. It's better to pay 500 rupees tax than 5,000 rupees penalty. Keep documents ready. Rent receipts, mutual fund statements, bank proof. Don't just assume you will never be asked. Keep them organized and keep them for at least 6 years. Don't claim deductions you can't prove. If you are claiming HRA, have your rent agreement and online rent transfers ready for showing anytime they ask for. Don't claim Section 80C or 80D deductions just because someone told you it is a safe bet. Declare expensive hobbies, expensive bikes, drones, collectibles, and declare the source of income if they don't match your salary. It sounds ridiculous, but people have been flagged for this. The big takeaway in 2025, it's not about filing your ITR. It's about filing it right. This year, the Income Tax Department is watching more closely than ever. They are not using the binoculars. They are using the data, artificial intelligence, and machine learning. Even one wrong claim, one mismatched number, and one undeclared income would be enough to set off a full-blown investigation. When the notice comes, it won't just be about taxes. It will be about explaining your entire financial life. Now let us wrap it up. The 2025 year income tax rules have changed the game. It's no longer about what you earn. It's about you. It is about how you behave financially. From luxury spending to mismatched TDS. Your ITR is being scanned like an airport bag. To avoid trouble, match your declared income with your real spending. Don't hide small incomes or even overclaim deductions. Always match with Form 26AS and AIS. Keep proof of every major financial activity. This year, honesty is not just the best policy, it is the only policy. Namaskar.